Oh man, the last time this on-chain metric did what it just did, it always indicated the start of the next bull run. This has got me hugely excited. We're going to be looking at the spent output profit ratio. I'm also going to be jumping into the charts to show you why I think we could be in for an explosive move. I'm going to be sharing which direction I think that will be heading in this video. Smash the like. Don't forget to subscribe as always. Check out the links in the description. Guys, look, it's been a very, very boring period. This price action has been consolidating, but I've been saying for a while now that this is perfectly healthy. We had an insane move here from 19,700 all the way up to just shy of 29,000, and now we've been consolidating. But guess what? Anytime price action consolidates for this long, it normally sets itself up for an explosive move to the upside, and that is now what we need to prepare ourselves for. Something big is going to happen because all of this has been winding up for a very long time, and either the bears are going to manage to capitulate us down towards the levels down here, 24, 25, 26 range, or the bulls can carry on their next leg of fulfilling the price targets back towards 30, 32, 33 range. Now, this important indicator has just flashed, but in order for you to understand exactly what's happened, I need to take you back to the previous times it's flashed. And if we go back to the cycle here, in 2016, you would have seen that the spent output profit ratio, okay, this is when the orange, that's this orange line here, when it crosses above the horizontal line here, which is when spent output profit ratio is equal to 1, that has always indicated the start of the next run. Now, if you look at this, after this ticked above 1, you saw a 6,000% move on Bitcoin, taking it to the cycle high of 20,000 in that cycle. What an impressive move all the way up there. Now, it's important to understand this means when it goes above 1, that wallets are on average in realized profits. When it's below here, we use this as well during the bear market. We used to look at this indicator together if you guys have been watching, and we would say that when this crossed to the downside, it's normally a big indicator of a bear market because it shows that people are spending Bitcoin in a loss, okay? They're spending in a loss. Now that we've crossed back above 1, we are seeing people spend realized profits in profit, okay? So they're now in the green again. That's what this is showing. Now, this is a double-edged sword. This is fantastic because, as I'm going to show you, this is now leading us into the next bull cycle. It's been a good predictor of that. But equally, this is the reason we've been consolidating for so long. You're getting people who are now selling, right? You've got to understand, people have been holding Bitcoin for a very long time. Maybe from 69,000, some of them, right? All the way down to 15,500. And many of those short-term holders, shorter-term holders, not long-term holders, we've covered this up in a previous video, they're taking this as an opportunity to sell. So what's impressive here, which is why it's so surprising, is I've said that I would not be surprised after a move like this on Bitcoin to have a retest down towards 25 because people are taking profits. It's natural. You've had a big move up here. People are going to take profits. At least come down here to 25,000, retest that support, and then we can work on our way, right? That's very normal after an extended move. So what's impressive is how Bitcoin's consolidating in an upward channel despite all these people taking profits. I think people need to understand how powerful that is and shows the momentum that's sitting with Bitcoin underlying right now. So coming back to here, we then had the same happen again, right? We fell all the way down because if you remember in that previous cycle, Bitcoin ran to 20,000, then fell all the way back down again, right? To lower regions again, below around $4,000. So similarly, again, the spent output profit ratio fell into this red territory below 1. Then it came back out again. Look how it came back out again. And again, Bitcoin went from about 4,000 up towards 13,000. There's 150% return there. Not too shabby, right? And then you had your pandemic period. And then again, when it rose from the pandemic period, you then saw your big run up all the way up to 64,000, okay, on Bitcoin. So really what you want to say, if you didn't have this pandemic in between, you could argue that maybe Bitcoin's price from this point when the spent output profit ratio turned 1 could have went straight into its bull market without all of this craziness going on here. It could have just went all the way across into 64. You can make that argument. Either way, every time this indicator has notched to the upside, Bitcoin has seen impressive moves. Now, if I move my big head out of the way, look at what we're seeing right now. This is huge. Earlier, when we were falling, when we started our bear market, you saw that we fell into this red territory. We crossed below it, we dipped back up, crossed down below, and this is when it spelled trouble, right? We knew we were in a long, painful bear market here. We spent a lot of time in this red territory. But look at what we've just seen right now, guys. We have finally started to tick above 1 officially on this metric, and that's a huge sign, like I've just shown you in the price action. So this is huge, guys. This is something that could be indicating that we could be set for another powerful move on Bitcoin, but we have to understand that by people starting to be in realized losses, there is a little bit of selling pressure. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. And that's normal, and that's what you have to contend with on Bitcoin here as it starts to go through these key levels. And that is why when we sit here on the daily chart, there's no wonder why we're facing a lot of resistance at 29,000, 30,000 level. On the one hand, you can see there's a serious level of resistance here, okay, which acted as support previously on our way down. That's naturally going to be a cluster of resistance for us when we're trying to work our way back up. On top of that, you've got the short-term holders selling, taking profits. They were holding Bitcoin at 15,500. Suddenly they look at their wallet and Bitcoin's now at 28,000. They start selling. They might not have as much conviction as long-term holders. But this is when you start to see the distribution happen. And what I mean by distribution is the short-term holders, they sell. But who do they sell to? They sell to people with more conviction than them. They sell to long-term holders. Somebody like myself will be DCAing and buying a little bit off these people who are selling. So that person who's so desperate to sell their Bitcoin right now, they'll be selling to a longer-term holder on average. And that longer-term holder, guess what? He or she doesn't care that Bitcoin goes to 30,000. They're not in it for that. They don't even care if Bitcoin goes to 64, 69,000 at all-time highs, right? They're holding Bitcoin for the long-term vision for many, many years. They want Bitcoin to get to 100,000 and 200,000 and eventually one day $1 million, right? That's what those long-term holders are holding for. They're buying the crypto and they're taking it off exchange. They have no plan to sell it. They want to give it to their kids and their grandkids. And that's the distribution that happens. And slowly as that distribution happens, that's what allows Bitcoin to have its next legs up. So we're seeing that distribution happen right now. We're seeing some of those short-term holders start to say, you know what, I want to take some chips off the table. That's been a fun ride. It's a roller coaster. You know, Bitcoin's crazy. And I was sat there at 15,500. I want to get out. But the long-term holders saying, you know what, I'm going to DCA some more. I'm going to DCA some more. This is exciting. We're getting ready for our next bull run. The spent output profit ratio is just flashed as well, which is a huge indicator. And we can get ready for the move to the upside. Now, there's one more interesting thing which is weighing in on this market. And I've got to share this with you. As I said in my previous video, we covered off the labor figures that came up last week. And we have right now, how I described it, as a Goldilocks market. And it's funny because I said Goldilocks and I was reading some articles on CNBC that some other investment bank could use the same term. I coined it. I want to trademark it. The market is in a Goldilocks period. And what we mean by that is when the labor market figures came out, including the non-farm payrolls, the markets were like, hang on a second. We want it just right. We don't want the labor figures to come in too low because that's fear of recession. Okay, very important. But if the labor figures came in too high, oh no, bad inflation. Inflation's not under control. So on Friday, we had our non-farm payrolls, and they came out bang on expectations. But the unemployment rate was lower than the previous reading. So this is leaving markets to think, hang on, the labor market isn't softening just enough. So there isn't enough explanation in there for us to get a pause at the next FOMC meeting. And that is why when you look at the Fed rate monitor tool, 63% on the market here is pricing in a 25 base point rate hike for the meeting on May the 3rd. That's the next FOMC meeting. And they're pricing in 25 base points. Now, before that, we have one critical reading which comes out in 2 days. On the 12th, we get the CPI reading. And that's going to be a critically important reading. But I do need to flag something with you, which is getting me a little bit worried. So this CPI reading here previously came in at 6. It dropped from 6.4 to 6. Now the market is expecting this to come in at 5.2. Now what's wrong with that? Oh, look at that drop, guys. That drop from 6 to 5.2 is the biggest drop we've had. That's a 0.8 drop year on year. So what they're saying is if you go back here all the way to June of 2022, we dropped 0.6. We then dropped 0.2. We then dropped 0.1. Okay, we then dropped 0.5, 0.6, right? 0.6 again, 0.1 and 0.4. We've never had a 0.8 increment down to the downside. Now there are some base effects, which is why people are expecting this, but this is very, very important because a miss on this and markets can take this the wrong way and get really upset. So we need to be looking out for this on Tuesday. Markets are not messing around. They want this to come down, not just into, 5.5 range. This is expected to come in at 5.2 on the year-over-year inflation figures. But it's not just that. It's also the month-on-month figures as well. Because the markets are expecting the month-on-month figures to drop from 0.4% inflation month-on-month to 0.3. In other words, that is moving from an annualized inflation rate, where it's 0.4, that means 4.8% annualized, to a 0.3, which is a 3.6% annualized inflation rate, which is getting closer and closer now to the Fed's target range of getting inflation to 2% as they've been shouting for a very long time. So we've got that to contend with this week. Big week on the macroeconomic front following the jobs data last week, and Bitcoin is primed and ready for a big move in either direction. Now, if we bring out the EMA ribbon, I do just want to remind you that we are moving into our EMA ribbon. You can see here, we had a big daily candlestick here on Sunday. Of course, that's low volume. You've got to remember, it's still Easter weekend. Many people are still off, even on Monday, as I record this video today. So do not be surprised to see low volumes. But once that starts to kick back in over the next 24 hours, the question is going to be, do we need to come and test our EMA ribbon? Or can we work our way to the top of the channel and explode out of here towards 31, 32,000? That's going to be the key. The other thing I want to share with you is the Bollinger Band. Because if you've been following this channel, you will know that the Bollinger Band is a very important indicator, which when it constricts, when a Bollinger Band, the upper band and the lower band, the yellow lines constrict, and again, we go through this on the TA course, ijaz.uk/TA, make sure you're caught up on all this stuff so it all makes sense for you. When it constricts, what it normally means is there's a big explosive move coming up. And you can go historically and check that on any Bollinger Band or any asset class. When you see it start to constrict, you normally get a break of the Bollinger Band and you trend in a big move either to the downside or to the upside. Now look at this. This has been constricted for a very long time. For a very long time, we've been in this very narrow sideways corridor. And this is getting ready to explode to the upside. So I'm getting ready for that. I do expect a big move any moment now in the next couple of days or so. Maybe the CPI will be the catalyst for that big move to the upside. Also worth checking in on the dollar index. It's been a little while since we looked at the dollar index, and sitting here on the daily chart, you can see it has had a powerful 4 weeks, right? The dollar index did have a big move here. But again, it's very critical that we reject it from this EMA ribbon, okay? It's fine that it's had a couple of days, right? It had a couple of days here as well. That's okay. But we can't let it go back above the EMA ribbon like it did here. Because if you look here on the dollar index, when it had this move, it moved 5% and corrected against the EMA ribbon. We don't want to see that happen again. Just nip it in the bud, reject it here, and keep it moving down on its downward channel. That is what we need to see here on the dollar index. So there you have it, guys. A very important moment for the Bitcoin price action as it fights for a key level at 29,000. Will the CPI be the catalyst which finally pushes us through? It's also exciting to see that the on-chain metrics are starting to flash indications of the next ensuing bull market. Smash up the likes, don't forget to subscribe as always, check out the links in the description, and I'll see you in the next one.